Hey everybody, it is Mark Coe for September 21st, Thursday here. So we just got through the big FOMC meeting yesterday and on to our end of the week. So we're almost into the month, into the quarter. And I want to talk about, let everybody know we're having an open house in our trade room next week and wanted to invite everybody in and let you know we're going to be doing some special things to end the year and really pick up trading in the last quarter. So this is your last chance. If you haven't done what you wanted to do for the year, this is the last quarter to get it done. So we'd like to help you be part of that. What I want to talk about today, three things that I focus on: trade location, define risk, and the defined risk gets you the third thing, which is outsized rewards. So I want to look at euro dollar and something that happened yesterday with the FOMC and talk about these three things. Trade location. What is trade location? Trading from levels, right? And what does that do for us? It helps us define our risks so we know what we're risking, right? This is what creates our edge. I don't have an informational edge. I don't know something that somebody else does not know. It's silly when people say that. What's not silly is to say the edge I have for myself is knowing where I will deal and knowing that where I'm willing to be wrong in a trade, that is going to be smaller than what I'm targeting or what my potential rewards are, right? That's what I'm talking about with trade location, defined risks, and outsized rewards. So let's look at euro dollar. All right, so here's what the charts look like coming into FOMC yesterday. And I think you guys can see pretty well what I focus on here. Trade levels, right? What are these levels? They're levels where the market has decided I'm not going higher or I'm not going lower. They're tops or bottoms of consolidation. That's what they are. And so what is this bottom edge representing? Well, in euro dollar, what this bottom edge represents is a market that has been controlled by long trades, or by buyers. Let me say that, by buyers. And this is the spot in the market where those buyers have stepped in and been willing to push the market higher. So fast forward to yesterday afternoon, 2 p.m. The market gets the sense that the FOMC is pretty serious about going forward with rate hikes, another one this year and on into 2018. So the dollar catches a bid, right? It's a dollar bid market. Causes euro to move lower, causes pound to move lower, causes gold to move lower. But where is it that euro trades? Where does it trade? I mean, this level was defined, right? And you can even take it back to August, but this general area has been defined. And I've been marking it by 1840 and saying as long as buyers can control the 1840 area, they're good to go. They're in good shape. I would only be looking sells up near the top. But as long as buyers control it, it's still a buy-side market, and that's where the focus becomes. So the three things I'm talking about: trade location, whether it be a counter trend short or a with the trend long, is helping you to define your risk. Why? Well, if I buy anywhere inside of this box, I can define my risk as being wrong on the other side, right? Or lower, right? I can define myself as being wrong down here. If I buy anywhere up in the middle of this trend, that's a long way away. And so if I have stops that are just tighter, then I'm not necessarily wrong. I just don't have great timing, right? So think about this spot. Think about this spot right here. If you bought it that day, you're beautiful. If you bought it that day, you could probably get break even if you're short term. If you bought it that day, you're not doing well. If you bought it yesterday, you're not doing great. So the idea is this level has seen upside and downside, but it's probably a lot more discomfort than many want to sit through, especially if you're short term focused. But the idea of saying, look, if I'm really wrong down here, or below here, let me say that, then if I deal in here, my risk is really well contained. My reward is also pretty great because I'm targeting moves back to this former edge. If I don't get them, that's different, but that's at least my target. So, risking 40 to 50 ticks for a 160, 4 to 1. And that's the real upside of it, right? The outsized rewards. So join me next week. I'd love to sit and spend more time, and we'll go over this stuff in more depth, and you'll see it done on short term, long term. You'll see the daily model. You'll see the daily levels. But the focus really being keeping an eye on those things. Where do I want to deal from? Deal location, trade location. What is my risk? How do I define it? And what are my potential rewards? and I want them to be bigger than my risk. I want them to be outsized in comparison to what I have to risk to get them. So for the 21st of September, happy Thursday, and I hope you all will join me next week. Cheers.